Also bring in another voice into the conversation, J.J. Kinahan, Chief Market Strategist at TD Ameritrade. Transportation average in that recession scare, that really got hurt, and I don't know, it kind of skews all these numbers. What do you make of where we are? And what's more appropriate, the year-to-date or the 12-month?
I would say that probably year-to-date, Joe, and although, they'll obviously be the same here shortly, so it really won't matter so much. But, it is kind of interesting looking at this rally with us just going to this record in the Dow last week. And I look at a lot of the retail, our clients' behavior. And what's interesting to me, Joe, is they've been kind of conservative over the last few months, which is one of the, I think we may continue. It's not some froth that people are dying to get into. Our clients have been pretty much flat in terms of their buying and selling of equities over the last couple of months. And what they are doing, which is interesting to me, is a lot of really shorter-term interest rate plays. Almost 75% of the interest-bearing transactions that have taken place with us have actually been 6 months or less. So I think one of the things you're seeing is people waiting for the sell-off. And often when people wait for the sell-off, we continue to rally and rally and rally. And the other interesting thing is you spent a lot of time on tariffs this morning. And one of the stocks that actually our clients have been continuing to sell as it goes higher has been Apple. And I think that that's the way that, tariff fears are being played out. It's still the number one held stock at our firm. But as the market continues to go higher, Apple continues to get higher. Every time there's bad news on tariffs, we see people come in to sell some of their Apple position. So just a couple of interesting things that are going on sort of underneath the surface.
Mike, I don't feel like the sell side really embraced this for the past 6 months. I really don't.
No, I think that's fair. They have not. The formal positioning targets have not come around. But I think this happens in phases. And so I think if you look at sort of the faster money trading community that says, look, we have a clear bottom in August. We've broken out to new highs. If you look at things like options traders, all the sort of short-term tactical stuff, it looks like it's getting a little ahead of itself, and maybe sentiment's a little bit stretched. But slower money in terms of the sell side and retail, and even really, I think, traditional fund managers don't feel like they own enough stock right now because of the way the market has behaved.
I saw this morning some death crosses combining with some other thing that showed 28,000 that were like ready to. And then I saw the guy who is on the commercials always talking about silver at some bucket shop company. I won't mention it, but he said something, and he's been pushing silver for. The same commercial's been on for 5 years about how silver is going to do something. It's you know which ones I'm talking about?
Yeah,
it hadn't gone anywhere while the market.
Right. No, I mean, look, you definitely can quibble with some of the rhythm of what's going on below the surface of the market. You had some poor breath last week. I think you have a lot more new lows in the NASDAQ than you would expect for a NASDAQ at new highs. But again, you can always find fault with something, and I think it kind of contributes.
So is this a blow-off, Kinahan, or not? Is this a blow-off top?
I don't think so. I don't think so, Joe, only because of one reason, and that is I think this week you're going to see the market get a lot of support because we have retail earnings coming out. We know the consumer's been, ridiculously healthy. And so there's no reason. You even had JD come out last week and talk about the secondary cities in China was responsible for their really good quarter. I find it hard to believe we're going to go into a week with so many retail earnings and not have many of these companies beat and actually set a good, forward-looking picture for the beginning of next year. When you have the employment rates where you have people out spending money. We're seeing evidence of it in every single number. And, we kick it off. You guys just got done talking about Home Depot a minute ago here. Yep. We kick it off at Home Depot tomorrow. And are they going to reinforce everything we're seeing in the housing market? And then we just go through the week with Target, Kohl's, et cetera. I find it hard to believe we don't get some support from those numbers, barring some bad news if it comes out on tariffs.
All right. Okay. Thanks, JJ. Mike, the S&P's 3120.
Yeah.
What's the top?
Tell me when. If
I don't
think it's 3120.
What do you think would get really? Where would you say? Oh my God, this is just really extended.
I think
33, 34.
If you're up 34, so 10%
from here,
March of next year. that's going to feel like you're way, way ahead of yourself.
You were shaking your head a little on the earnings report things. Besides the consumer.
In terms of retail?
Yeah, besides consumer retail, what else?
The retail, that the consumer is so strong, is a reflection of how despondent we were about the consumer in August. It's fine. The consumer is consistent. It's performing, but it's not necessarily like it's off to the races.
So what earnings are you going to look for, leaving aside consumer companies?
It's the industrial earnings. I think that's one that has to confirm whether we have this inflection point in global demand or not.
Gotcha.